Welcome to Money Talk Viewpoint. My name is Stuart Cruz. I'm founder of Cruz Asset Management. I'll be your host today. And for those of you who are not familiar with Cruz Asset Management, we're a boutique asset management firm. We are quantitatively focused and we run a virtual family office. And we're looking at what are the impacts of sustainable energy? What are the impacts of renewable energy? And our guest today, Brian Jones, who's managing partner of Windmill Capital Management, is focused on creating a positive global impact with clean and renewable energy. Welcome to Money Talk Viewpoint.
Thank you, Stuart.
At one point, the goal of any company was to maximize its own shareholder value, and then everybody else would take care of itself. But now it seems like there's a shift where it's not just shareholder maximization. You need to maximize the stakeholder values.
I think that's absolutely right. We're definitely seeing more of that, and a lot of it is, in the past it wasn't effectively priced into a company's operations, and increasingly, and climate change is a great example of that. Companies committing to zero carbon, carbon neutrality, those costs are those indirect costs are being priced into companies' business models, and that's in part what's driving, again, that awareness and the measurement and that broader stakeholder outlook, as opposed to just who are the owners of the company.
Right. So can you give me some examples of very specific examples of what impact investing strategies you've been using, or some of the companies you've been working on investing in, and some of your brightest spots?
So we are an investor in commercial scale on-site renewable energy assets, which means that we help companies typically finance on-site energy production, which is cleaner, cheaper, and more reliable than utility-provided energy, and to benefit from that on-site energy production, essentially on a pay over time type of model, where they're paying for the energy, whether it's electricity or thermal energy, and they're paying for that over time. We're enabling the growth of renewable energy by providing that financing, through our ownership and then sale of the energy. And the benefits, the United Nations Sustainable Development Goals cover a whole host of things, from water conservation. People are unaware generally of how much building heating and cooling, how much water is utilized, because you're typically using evaporation chillers in traditional heating and cooling, and alternative energy, including geothermal, can eliminate virtually all of that water evaporation, preserving accessible water for human consumption and agricultural uses. Of course, the environment itself and climate change, and we all know the benefits of renewable energy towards climate change. The SDGs relate to education, and again, we work with renewable energy developers that are focused, in some cases exclusively, but at least partially, in providing renewable energy for schools and colleges. And public school system represents, I think, the third largest investment in city, state, municipal owned facilities in the country. And so our ability to provide cleaner, cheaper, more reliable power, heat for those facilities means that there's more resources available to actually educate kids. There's a constant, struggle over funding for education. It doesn't matter where you live. It doesn't matter, the community, the state, the level of education. There's never enough money. We can make a big difference by making a little difference a bunch of times, right? So, one school doesn't mean a whole lot. 2 schools may not mean much more, but a dozen schools, 100 schools, 500 schools, 1,000 schools, we really, working collectively to make to create a substantial impact.
Struck me, you said I'm using on-site energy, renewable energy. We were talking about potentially launching a crypto mining fund, and I know the 3 characteristics of whether this is going to be successful is hash rate, which you don't have that much control over, but energy costs and the price of crypto. So those who can get access to lower cost energy tend to win. And
right.
make it on site and or figure out a way to do it from a renewable standpoint, that's where the crypto mining really gets its bad. Have you guys gotten involved with that aspect of the crypto space?
So we're not yet involved with crypto in that way. We've studied the space quite a bit, and you're absolutely right. A few years ago, it was more a capital cost around the hardware and the software programming and to maximize hash rate. And now that those costs have come down, really the critical factor in profitability, relative profitability among crypto miners is going to be the cost of energy. At the same time, they've gotten a lot of pushback because they consume a lot of energy, and there are questions about using all of that energy, and staying out of that debate. The energy issue has been central to a lot of the success in crypto, because there've been utilities that have curtailed. They've got other needs within the system. So we've talked to a number of folks who are utilizing or have plans to utilize some sort of waste energy or waste fuel to power crypto. There's a lot of examples of that out there. We're actively looking at those. It's a little bit different from what we typically do, because our focus really is on technologies, renewable energy technologies that are proven, well established, so that we know what the output is going to be. We can reliably measure that output, and we can also reliably measure the costs associated with operating and maintaining those assets. And then from the revenue side, we typically look for longer term agreements, so that the revenue has greater level of predictability, which typically you don't get in that crypto type of offtake, because the profitability is going to depend on what the value of the whatever tokens it is that they are mining. Having said that, there are a lot of opportunities. There's a lot of creative folks, and there's a lot of money to be made in that type of business, and so we're going to see more and more of those types of opportunities, coming out, where they're using some alternative.
So thank you for that. In looking at your website, something struck me, and I always get the question about ESG investing, and I know you said they're not the same, but from a public standpoint, that's what we're looking at. You said this was much more private. You had a phrase in there that was beyond profits, and we touched on this a little bit, but can you tell me a little bit more about your investment thesis for renewable energy and the profitability within that space? Because at the end of the day, when people are putting money at something, ultimately they want to see the return. So they want there to be some sort of viable, not just an altruistic donation to, are helpful, but every time there's a vote to raise the taxes, they vote it down, right? So
right. Yeah, you make a great point. It's important to distinguish, impact investing from donations, right? This is not philanthropy. There at the end, there has to be a viable and reliable economic benefit to the investments. And I think one of the things that's made impact investing more popular, in addition to the social elements, are that there are fewer and fewer trade-offs between the social impact, the impact benefit, and the economic return. It used to be that you would expect from an impact investment there to be in exchange for the impact that's being delivered, and that that is increasingly not the case. That